Looks like silver's taking a nice jump up as the equities take a nice crash. Anyway, you know, this is one of the things that's been predicted. You know, you got to go by this. I know the fundamentals don't really mean that much a lot of times, but they will kind of catch up. They will catch up. But, you know, especially in commodities, there will be the biggest erratic movements going. You know, if you think the stock market went up a lot, 30% in 2013, that was a lot. The commodities can go up a hell of a lot more than that. Now, the one issue with the equities, though, right now, is the PE ratios. The PE ratios, you know, they've been higher before. Actually, in 2000, before the big crash in 2000, they were actually, that was the highest they ever were. The second highest they ever were was in 1929. And the third highest they ever were is now. So that's telling you something. Price-earnings ratio. In other words, the price of stocks is costly compared to earnings. Now, also, companies are having very high earnings. You know, that's the other thing, too. You know, maybe if the earnings aren't that good and the price is up there, that's another way you think, well, maybe the earnings can go up more of the company and then it'll still raise the stock price up even higher, right? But the earnings of the companies are already high. But, you know, the wages of the workers are low, which actually, you know, this whole thing, it kind of catches up with itself because as, you know, say, for instance, the corporations are making out really good money and the people themselves aren't making higher salaries, well, it comes full circle because basically it kills the market that all these corporations are selling to. And that makes it, you know, it's in other words, it's a cycle of life, basically. The corporations are dependent upon the middle class to keep themselves rolling, too. Even the 1 basis point, I don't even want to refer to the 1%. Let's refer to the 1% of the 1%. Those are the ones that are actually making out. If they don't have a market to sell to or their market becomes diminished, it's like the market doesn't go away completely. I don't want to be ludicrous about this. But if, say, for instance, the middle class gets squeezed, they'll find ways to cut and diminish, they'll cut back on where their spending is, and that will eventually affect the corporate incomes. Actually, the retail sector has been affected greatly this last Christmas. Even though the employment in the retail sector still remained high, the retail sector actually has gotten trashed this last Christmas. But this could be the beginning of, you know, we've had a couple times where the stocks have kind of went, you know, and then they bounce back, and they bounce back. But at this time, we also have them tightening the policy in the Fed. So, you know, what can happen here is that, you know, as the Fed policy is tightened, it's also having a psychological effect on the markets, too. You know, anybody's got half a brain that's in the stock market now realizes that, you know, they went up. We've had a long bull run from like the low point. Maybe not a long bull run from like the high point in 2000, but from the low point in 2009, there's been a long upward trend. And, you know, that's the third longest bull run ever, okay, in the last 100 years anyway, if you want to put it that way, in U.S. financial history. Now, you combine that with the high PE ratios, the super high corporate earnings, the low wages on the lower wages on the you know, the people who are actually doing the work, the labor or whatever it is for the corporations, and also the fact that they're tightening policy in the Fed. You know, it's a no-brainer that, you know, the equities are looking kind of dangerous. You know, a lot of people have been saying is that for the next so many years, you're probably not going to get that much return on it. And I don't think it's going to be like it's flat. It's going to have a major dip, and then it's going to have a retracement. And, you know, that coincides with the George Soros bet, which he started to make. He made a big bearish bet on the S&P as of August 2013. He actually added to that bet in early 2014. It still hasn't really played out. But there's a lot of signs it looks like it is going to play out. You know, he's not a day trader. And, you know, there's been times, I guess, even the big people like Berkshire Hathaway's been going through times sometimes when they weren't doing good. But he always came back and, you know, made up for it. You know, that's the same thing maybe with Soros too. Maybe this bet he made is not, well, obviously it hasn't played out right away. I kind of expected it, maybe the markets to really tumble when they had the budget crisis in October of 2013. That was a guess, but it didn't happen then. They ironed things out. It looked like it could have happened. You know, it could have happened if they didn't iron things out. There would have been a major problem in the markets. But, you know, it's like they're getting very top-heavy now with the markets. So what can I tell you that, you know, the signs are there. And, you know, where the money's kind of going into, some of the money's actually going into the precious metals. Because whenever, that's the fear factor. You know, it doesn't mean you're a scared person if you put into precious metals. But that's what happens. That's what happens when there's uncertainty in the world. Uncertainty in the markets. Uncertainty of what the policy is going to be. A lot of times people go into the precious metals as a last-ditch safe haven. So, you know, we're in the precious metals for that reason, because we think long range, that's the place to be. Now, as far as what's going to happen in the future here, you know, the situation in Ukraine is totally up in the air. And now, I have to say this, because I had somebody comment on, he made a very long comment. He's actually a person that lives in Ukraine. And it was kind of like an anti-Western policy comment. And I have to say this, I am not for the Western policy or the Russian policy on this Ukraine issue. I think the Ukraine ought to be independent. Get rid of the stupid corrupt leaders they got in there. All of them were corrupt. The guy before Yanukovych was, the woman before Yanukovych, she was screwed up too. They're all screwed up, you know? Actually, what's going on in Ukraine, they're getting screwed over by both the West and the Russia. They're getting screwed over by both. They are, you know? I don't know what the hell to do about it. You know, I don't really know what to do about it. Nobody knows what to do about it. And, you know, it looks like the USA's got some serious problems, too. I'm not going to comment too much, but when I saw the First Lady do 25 push-ups on Ellen DeGeneres, you know, I saw that clip on a video, and I said to myself, after watching some other video, I says, man, there's some weird shit going on in the White House, man. That's all I'm going to say about that on this video. And I'm like saying, man, this is getting a little too strange to me. And if these rumors are true, we're in deep shit, big time. Big time, because what that means is that the military probably knows about it, and they don't give a shit as long as they're getting paid. You know, this has been one of my contentions, too. You know, a lot of people don't understand. You know, this is one reason I don't kind of like the military in some ways. In some ways I do, in some ways I don't. You know, a lot of times people think that if we ever came to a real crisis situation, that the military would fix it. I don't think so. You know, I'm going to tell you the fact is right now with, let's hope there's no crisis situation. The problem is with, you know, getting into that kind of crisis, if it's really, really bad, the military pretty much works for money on the top. You know, the people that do the fighting, the people that are lower ranks, the people that go in there if they're only in there for 4 years, the people that just jump in it for, you know, the reasons that they think it's for, they're controlled by the people that are higher up, and the people higher up are pretty much controlled by money. That's a fact. It's a sad fact. It's exactly what goes on, man. So if we have a really, really bad situation, don't count on the military to fix everything. It ain't going to happen. No way in hell. No way in hell. Let's hope there isn't a bad situation. And let's just hope it just goes up where silver goes up a hell of a lot, and I could sell it to Goldman Sachs at, you know, $1,000 an ounce or something, like they're going to buy it then. I'd like to sell it to them for $1,000 an ounce. Anyway, you know, Lloyd Blankfein or something. Hey, I'd like to sell it to Max Kaiser for $1,000 an ounce. It'd be better, because right now I don't like Max Kaiser more, I'd say, than Lloyd Blankfein. I think Lloyd Blankfein is more honest than Max Kaiser. To tell you the truth, that guy's like Max Kaiser's a disinformation agent from Russia, for all I could say, you know. But you know, the things that goings on today that's been going on, like in other words, in the markets, where we had this major turndown, implosion in the Dow, and also if you look back just about in the last several days, we've had the tech side of the market really crash. Inside the actual general equities, the tech area really crashed. There's been a major implosion there. It's happened a few times. And, I was thinking that's a warning signal for what's going to happen here in the future with the general equities. And the general equities are getting clobbered right now. So what I expect is this may be the beginning of it. The markets start turning down, maybe not tomorrow, the next day, but over the next month or so, you might see a major correction. And what's going to happen is Janet Yellen's going to have to reverse policy. She's going to have to go to massive stimulus. And that money may possibly go into the precious metals. Despite what Goldman Sachs says and all this crap you say about gold being, they're knocking gold, but from what I've read from a while back, they've been accumulating gold. And actually the central banks have been net buyers of gold since May 2013. They were selling off. They were actually short gold. The six largest bullion banks were also the six largest bullion banks are net long as of May 2013. They were net short January 2013, and then it went down. And then they were net long. So I mean, it's not gone up that much since May 2013, but I expect that when it does go up, it's going to go up exponentially fast. That's typically what happens with these precious metals, commodities, or oil and silver and copper and things like that. Copper's been taking major hits lately. But, what happens is it gets legs. Commodities are the most volatile section of the freaking place you can invest. And, when you're buying these things cheap, and when the fundamentals are saying that they're not making much money on it, and the miners getting clobbered, that was the only area of the stock market in 2013 that was getting clobbered. Well, in the long run, it's going to go up. It's going to go up. It's going to go up. So, in other words, the stocks themselves, the PE ratios, the price-earnings ratios, the stocks themselves show that they're pricey. The metals themselves are showing that they're cheap. They're still showing they're cheap. And, even after we've had corrections in the equities recently, these PE ratios were still too high. They're the third highest they've ever been. The only time they've been higher, the PE ratios, I think they're 24.9 on average. The only other time they were higher was in 2000, in which we had this major crash, and the other time before that was in 1929, which we had this major crash. So, it's a pretty good bet. It's a pretty good bet. And when you're considering that, the earnings are high, the actual underlying economy is pretty weak. And the reason I stated the economy is weak because some of the real things you can actually judge and say what the economy is weak is the usage of gasoline in the retail sector. Not the commercial sector, not like saying the usage of fuels or crude oil products or anything like that being used in the commercial sector where you're making plastics and stuff, but we're talking about retail sales of gasoline. They've actually been going down since 2007. They've been going down. That's telling you people are driving less and less and less, which tells you there's either a lot less disposable income out there, they're not going because they're not driving around on the weekend, or it's not the gas mileage of cars, because gas mileage of cars didn't change much since 2007, that's for sure. Or there's actually a lot more unemployment out there, or they're getting jobs closer to where they live, or what, I don't know what's going on. But actually, the retail usage of gasoline actually does state that the economy itself is weak. And, when you're looking at corporate profits being very high, they have to have a market to sell to. And you're looking at the equities going up so much, and they're like even detached. The equities themselves, the price of the equities are even detached from the earnings. In other words, they're going up even faster than the record corporate earnings. It's telling you common sense that the markets are pretty damn top heavy in price. No way in hell. I mean, you're going to say that scenario can keep going. Back in the 20s, I used to think it could, because it was the new age of the Industrial Revolution just came about, and it was the end of the war to end all wars, and there'd be prosperity forever. There was all these new inventions. But today, I mean, if you're looking at things are not even like they were in the 20s. Actually, the age of the 20s was actually the age of serious prosperity when the car just came on board. You know, there was Tesla's invention with the electricity became popular throughout the world. Manufacturing was going full steam in many different areas, not just by Tesla's inventions, but Tesla's inventions also brought about refrigeration in a home, you know, electrical appliances, all kinds of stuff. Electricity electrified all of America. So, I mean, you know, in the 20s, they had a reason to actually think things can keep going. Today, nothing's really that different from what it was that many years ago. You might say maybe the information age is changing things a little bit, but it's not that different from what it was years ago. So there's absolutely no fundamental reason to think that prosperity, the way it's been going for the corporations, is going to continue. So if you add that in with underlying problems that are going on in the economy, the food prices rising greatly in 2014, the livestock prices rising greatly in 2014, you know, the major spikes in those areas, it looks like there's going to be a major pullback in the markets, and George Soros is going to make a hell of a lot of money on it. He is. And at the same time, if there's a lot of fear and panic and uncertainty, and Janet Yellen has to go full steam ahead on QE and reverse her policy of backing off QE, well, it might very well go into the precious metals. So, you know, we're looking at signs of what we've been looking for quite some time now, and it may play out this way pretty soon. I'm expecting that metals are going to go up very fast in 2014, and I was expecting them to start at late 2013, but I'm thinking that if they do, and if they do go up very fast, there's going to be another reset of the metals in 2015. Depends on how fast they go up. If silver solidly breaks through 50 really quick, that's a hell of a gain. I know what the other is going to be saying, $500 immediately. No. But if it does go through that, I think it does go through some crazy price this year. It's going to have a major pullback again. Not to 20, but it'll be way below where, you know, it goes to. It'll really have another major pullback, and I think the final run-up is going to be 2017, 2018. So that's all I got to say for now, but it looks like things are starting to play out as we expected. Just taking a hell of a lot longer than we expected.